Hey, what's up, guys? Today I'm gonna talk about the anatomy of a Japanese candlestick. And we use these candlesticks every day in our trading. So, a Japanese candlestick consists of 4 parts: the open, the close, the high, and the low. Okay, and I've sort of drawn a bearish candlestick here on TradingView. And you can tell this is bearish because the close is at a lower price than the open, and also it is in red, which for many cases indicates a bearish candle. My bearish candles are orange, however, but that is personal preference. Okay, so let's go over the 4 parts. So we start with the open here, and the open is basically the price the candle opens at, okay? And the close is the price that the candle closes at. And the high is the highest price reached during this candle's life, and the low is the lowest price reached during the candle's life. And for example, if this is a daily candle, the lifetime of this candle is 24 hours, so the high would be the highest price reached in those 24 hours. Okay, let me draw a bullish candle for you guys. So we start with the open. Let me just mark it out in green so that it's easier for you guys to see. Okay, so here I've drawn the body of the candle so far. Now we need the high and the low, and I drew this wick here like that, and then the high is up here, and then I draw a wick to the downside as well. I call these wicks, these aren't part of the body of the candle, these are the wicks. Some people also call it shadows. So you guys can just quickly guess where you think the open, high, low, and close of this candle is. Hopefully you will understand it. If not, I will help you out. So let's start with the open of the candle. Now, it's a green candle and it's a bullish candle, so this means that the open price is lower than the closing price. And the open is at the start of the body. So we place this down here. And then where did the candle close? Well, the candle closed at the other end of the body. What was the highest price that the candle reached? The top of the wick. So this is the high of the candle right there, and the low is obviously the lowest point of the candle. Okay, let's go over a few candlestick formations that we can use in our trading. I first want to talk about the hammer, which many people use as a way to identify a reversal or retracement in the trend. So let's use a downtrend as an example. Okay, and I'm just going to draw a downtrend You can see this line here represents price, okay? And we're coming down, and then down here we see a candle. Oops. We see this type of candlestick here. Okay. So this is a candlestick, right? And this is the downtrend. And then at the bottom of this downtrend we have this candlestick. This is a hammer. Why is it called a hammer? Because it looks like one. It has a long wick, which is representing the handle of the hammer, and then it has a small head, which is the head of the hammer. Okay. Now, why does this candle look like this? Well, you have to imagine in a downtrend there's a lot of selling pressures, and sellers are in control of the market, and that's why the price is moving down. And then once price reaches a certain point, buyers will start to come in because they want to buy at this level, and the hammer can be a visual representation of that. And you can tell because sellers during this candle here, and this is a daily candle, okay, so this is one day. During this day you can tell that sellers try to push the price down, because obviously the price actually was all the way down here at one point, at the low of the candle, but then buyers came in and pushed the price back up again, which creates this large wick to the downside. And this tells us that, okay, buyers are starting to come in, and we're seeing less pressure from sellers and more pressure from buyers, because the fact that they managed to push the price all the way back up here again, right? And so many people uses this as a possible reversal. I actually took a trade last week. I think it was on the Aussie JPY. Yeah, okay. So as you can see, I took a nice trade here last week, and you can tell price was moving up. I'm not gonna explain completely why I entered this trade, but there are some other factors as well. But I used the hammer as an entry point. Okay. So price was moving up nicely, and then it made a hammer here. It formed a hammer. You can tell, right? Now, I know that I used now, of course, this is a bearish hammer, and the example that I drew was a bullish hammer. But this is you can call this a reverse hammer, an upside down hammer. But yeah, price was moving up. It came up to this resistance, and you can tell that buyers made an attempt to push through the level, creating this high, but the bears or the sellers rejected, causing the price to close back below the level. And this is a bearish indication, and this can be used as a reversal trade, and I took that trade. Now, I don't just trade hammers blindly. I actually saw it on the higher time frame. As you can see, we had a swing high here, and that's the only reason that I took this trade. But I used the hammer as an extra confirmation. Okay. So one more candle I want to talk about before I go is the Doji. Let's go back to my drawings here. Okay. So this was a hammer candle, a bullish hammer, right? Let's just draw this. Okay. And now I'm gonna draw a doji. So a doji looks like this. We have a small body, okay? A doji has a very small body. And it doesn't matter what color the body is, because it is so small that it is practically irrelevant. And a doji will have a long wick. Okay. Okay, like this. And usually it will have long wicks on each side, okay? Now, this candle represents that neither buyers or sellers are in control. Okay, and this can happen, for example, in an uptrend. Price will be moving up, and we will start to see these dojis, okay? And this means that sellers haven't taken control, but they have successfully challenged the buyers and stopped price from moving up further. And you can tell because buyers tried to push the price up and sellers rejected, and sellers tried to push price down, and buyers rejected, if that makes sense. So this just represents a state of neutral in the market, and we can't use this candle for much on its own, but we can use it as an indication that something might happen soon in the market. Okay, so this is called a doji. Now, I came with 2 examples on different candlestick formations, but there is so many, okay? And there's also different forms of dojis, and yeah, we have so many different candlestick formations, but the important thing is that you understand why the candle does what it does. Okay, I hope you learned something from this video, and if you do, please leave a like. Bye.